Hello everyone, welcome back to Fundrise Finance. The month of May in the stock markets was neither high nor lows. I would say it pretty much went sideways through middle of the month. And the market was pretty much following the news around the debt ceiling. And whenever there was optimism, the market went up. And whenever the deal's gone sideways, the market tanked. But towards the end of the month, as more and more optimism towards the debt ceiling got confirmed, the market just took off. Overall, the last 1 month, the market was pretty much run by the top 8 companies from the big tech. That includes Microsoft, Apple, Nvidia, the monster performer, up 40% in the last 1 month. Broadcom, Google, Meta, Amazon, and Tesla. Pretty much everything else was flat or down for the month with a lot of uncertainty. But one thing that keeps on giving is my portfolio dividends. And that's what pretty much we are in today's video to discuss about. So without any further delay, let's get started. To start with my M1 Finance portfolio, whose portfolio value is $21,745 currently, down 2.69% overall. It would have been much in the red if not for the dividends that kept the portfolio floating. For the last 1 month, my portfolio was pretty much flat, down just 0.35%. When compared to the Dow Jones Index, my portfolio would say has done better and pretty much in line with the S&P 500, which was just 0.25% for the month of May. Looking at the dividends in this portfolio for the month of May, we start with AT&T with $3.55, Edison International $2.52, JP Morgan $2.33, Verizon Communications $4.39, JP ETF $7.65, JEPQ ETF $7.32, Air Products and Chemicals $2.23, Nucor $1, AbbVie $2.53, Kinder Morgan $4.03, Morgan Stanley $2.72, OneOak $3.55, Realty Income $1.45, Texas Instruments $2.01, Caterpillar $1.48, Costco 38 cents, Citigroup $2.18, Walmart 90 cents, Devo $2.96. Arbor had two transactions, one for 25 cents and the other for $7.14. So overall $7.39. So I keep track of my investments through Google Sheets. So what we see here is for M1 Finance portfolio. Like we saw earlier, the value of this portfolio is $21,744.50, currently yielding 4.2% with an annual income of $914.12. Adding up all the dividends from my M1 portfolio for the month of May, it comes down to $62.57, which is almost 50% higher than what it was in the May of last year. And even when I compare it with the second month of last quarter, that is February, where it was $46.30. So we see a nice increase. Looking at the quarterly, we see this bar is currently at $124.79. So by the end of the month of June, we hope to see this value much higher than Q2 of last year and also last quarter. Looking at annual, I see 2023 on track to beat 2022. Now my favorite chart of all, the dividends growth by quarter. You can see here the dividends rising a nice upward ladder. So like I said, by end of Q2, I hope to see this value higher than Q1. Looking at the expected payments in my M1 portfolio for the month of June, we see here payments expected from Johnson & Johnson, Landell Vassell, Pfizer, Target, 3M, Walgreens, Tractor Supply, Edison International, Realty Income, Prudential Financial, Whirlpool, L3 Harris, McDonald's, Qualcomm, Goldman Sachs, T. Price, Digital Realty, PepsiCo, and Union Pacific. Adding all of these, it comes down close to $39. Almost all the ETFs in my M1 portfolio pay in the third month of the quarter, which is June. So in the month of June, I should be expecting many more payments than these from my ETFs. So those should add up to cross what I got in the month of March for $96.44. So let's see by the end of June how these graphs look. I do anticipate they grow in a good upward fashion. And next is my Fidelity portfolio, whose current value is $31,136, currently yielding 3.47% with an annual income of $1,081. So from my Fidelity portfolio in the month of May, I received dividend payments from Toronto Dominion for $3.73. JIPQ and JP, I have one share of each here, paying me 53 cents and 46 cents. One Main Holdings, $5.01. General Dynamics, $1.19. Clorox, 31 cents. ASML, 60 cents. AO Smith, $1.12. Procter & Gamble, $2.43. Omega Healthcare, $6.16. Northwest Bank shares, $3.81. Hormel Foods, $1.17. Abbott Labs, $1.69. Main Street Capital 87 cents, and Paychecks $1.30. Adding up all of these, it comes down to $51.49, which compared to May of last year, it's almost double of that. And looking at the February payment, it's almost $20 more than that. So the growth is good, going up. Quarterly, the value is already higher than what it was in Q2 of last year. Annually, the value currently for 2023 is $262 here. So I expect this to beat out 22 by the end of the year. Looking back at the dividends growth by quarter, again we see a nice laddered upward growth. Looking at the expected payments here in the month of June, we can expect payments from Southern Company, Amgen, American Electric, Emerson, Hekla, ExxonMobil, Chevron Corp, PPG Industries, Rockwell Automation, Main Street Capital, Nextra Energy, Duke Energy, Waste Management, Manulife Financial, IPG Group, VF Corp, IDEX Corp, Corning, City Realty, Devon Energy, and Bank of America. Adding up all of these, it comes down close to $89. If I also add the dividends from my ETFs in this portfolio, I hope that beats out the March value of close to $109, which is so far the highest in my portfolio. So hope to see another record-breaking month in June. Let's see how that comes up. That higher value should bump up this Q2 number higher than Q1. And the third and final piece of my portfolio is from Acorns. Account value currently is $5,589. Now, Acorns is my first investment portfolio, which I started in end of 2017. And from then on, I've seen this portfolio slowly churn up profits. It took a dip for the COVID crisis. You can see here my portfolio value was just $876 then. But after then, I just kept on investing consistently, and this portfolio has kept on churning gains. Yes, 2020 was tough here also. You can see the portfolio value going down, and then again starting of the year of 2023, you saw the value going up and up again. There's a classic example of how if you just stay invested in the market, keep constantly investing, we should see gains in the long run. There's no better way to explain than this simple chart. Now, Econs it has a simple four fund portfolio that has the S&P 500 ETF VOO for the large cap, IJH is a medium cap, IJR is a small cap, and IXUS is the international. Simple four fund portfolio where 70% is in the US and 30% is international. I've made many videos in the past explaining how Acorns works, how it is perfect starting vehicle for anybody who is new to investing journey. So this is my set it and forget portfolio where I just invest $25 every week. As you can see, it just keeps regularly invested every week on week. So overall for the month, $100. On top of that, the roundups from my regular purchases that just gets added up and that comes down to close to $10 every month. So overall, $110 range invested every month constantly into the market. So this is my dashboard, track the accounts portfolio. As you saw, current value is $5,565 with a current yield of 1.52% and annual income of $84.52. As I said earlier, the simple four fund portfolio with the S&P 500 ETF at 55%, mid cap IJH at 10%, 5% IJR, that's the small cap, and IXUS, the international, at 30%. As you can see here, VO is higher weighting in my portfolio currently at 55.7%. So my next investment should get heavily weighted into IXUS. So that's how your investments get rebalanced accordingly. Now, none of these ETFs paid any dividends for the month of May. So effectively, my Acorns dividend for the month of May is zero. But I should see some dividends trickling in the month of June. So this is the overall dashboard that includes all the three portfolios from my M1, Finance, Fidelity, and Acorns. Current value is at $58,445, yielding 3.56% with an annual income of $2,079. So adding up my May dividends for M1 and Fidelity portfolios, it comes down to $114.06, which is almost twice that was paid the month of May of last year. And it's higher than what it was in Feb month. That's the second month of the previous quarter. Looking at the dividends growth chart by quarter, we can see here my initial investments through accounts barely paid me any dividends. But as and slowly I started investing on my own into the M1 portfolio or the Fidelity portfolios, we can see here the dividend getting higher and higher and picking up in the pace. So this is what we call the snowball effect, where the dividends you earn get reinvested into your own portfolio, which will end up purchasing more shares, which will result in getting paid more dividends in the subsequent quarters. So that's the beauty of dividend investing. So currently, almost $2,080 generated in this portfolio gets reinvested, and that pays me more dividends subsequently. Looking at the income goals set for my portfolio, I've already reached my December goal of $1,800. So currently I'm $280 above that. So that's like 116% almost. My 5-year goal of $2,500 by end of December 2025. 83% through it. So at the current pace, I should be able to reach that much ahead of 2025. Looking at the other dividend metrics, my current portfolio, if I look at different timelines, monthly it pays me $173, weekly it is $40, daily $5.70, hourly it is 24 cents. If I look at an 8-hour workday, that'll be $1 per hour. So these are some fun metrics to look at, but very important if you're really planning to retire off your dividends. These metrics play an important role to keep track of how much dividends your portfolio is actually generating. Is it enough to survive or sustain after retiring? It is not impossible. So this is why I keep reiterating the fact that as long as we keep our investing simple and disciplined, that's the most important one. As long as we do this, the markets will reward us in the long run. That is how we build wealth slowly over time. So that's all I have in this video. Hope you all liked it. And I would really appreciate if you could hit that like and subscribe buttons so that YouTube can suggest this video to many more people out there. That would help this young channel. Until we meet in the next video, let's try to do as much as possible to be financially healthy and keep taking those small strides towards financial freedom. See ya. Bye.